Hello, ladies and gentlemen. Welcome to Bert Dohmen's Chart Predictor. Today, we're going to take a look at a very important index, which is the NYSE, the New York Stock Exchange Composite. It contains all the stocks on the New York Stock Exchange. It's not just like the S&P 500, which is so easy to manipulate because it just takes basically a dozen stocks and you can do that. You can make that index do what you want it to. But the New York Composite is much more difficult to manipulate, and it is very relevant. This is a monthly chart. Each one of these vertical bars that you see here is 1 month of trading. So it goes back to 1997. And what I wanted to show today is where we are. Instead of looking at all the trees in the forest, one tree in the forest, we're going to look at the entire forest and see what it looks like. Here you can see the big bear market starting in the year 2000. This was the bursting of the technology bubble, and it bottomed out here 2 years later, and it was horrendous for many of these stocks, the technology and the internet stocks. They disappeared. Others were down 90% or more. Some of the mutual funds were even down 90% or more, mutual funds that invested in those sectors. And then we had the big powerful bear market. This was the Federal Reserve bear market created by plenty of liquidity injections. And that went into the 2007 top. Right here, we said the recession has started. That was December. In October, actually, we said market top, and that was very timely. Then we got the bottom here, and lo and behold, at the exact day of the bottom, on March 6th, 2009, we said close out all short positions. We had made lots of money for our readers on the way down, and on the exact day of the low we closed out shorts, and then the following week we said buy. And then we had the big up move. This was the Ben Bernanke bull market right here, quantitative easing, putting basically $4 trillion of artificial money into the system, something that had never been done before. This is new ground. But look what happened to the trading volume right here. This is the volume, and it was down, down, down. As the market goes up, this volume kept on going down, and that is very important. Any price rise in anything, whether it's real estate or the stock market or an index, that goes up on lower volume or declining volume is actually creating a big vacuum underneath it. It's a vacuum of demand, and eventually when the demand has stopped, it will have to go down. The vacuum is always filled, and then you see a very sharp plunge. And now take a look at this indicator. This is the MACD, which many people know. And here, look at how nicely it worked. Here's the big bottom in 2003, early 2003, the big rise, and when it crosses over again, it's a sell signal, and that came in late 2007, and then it crossed over again here in 2009. This was a couple of months late, but still got you in. And we always go, when it crosses over here, you see this faint line. Any signals that are not above that line, we don't honor, we just disregard them. But look at what we are now. Here is the crossover, very similar to this crossover, and now it's on a sell signal. This is very important, and because this is a monthly chart, it has so much more validity. If you should use a daily chart, which is a much shorter time segment, then you can have a crossover like this, and it might be valid for a couple of months, and then the market goes back up again. But this turnover to the downside is very important, and this is a very special regression channel. This is our own proprietary channel, and you can see here it dropped through again, had a rally up, which is very normal. This is a throwback rally, as it's called. Goes back to support, the prior support, which is this horizontal line, and then it normally starts heading down. This weekend we're going to finish the next Wellington letter. It will be out on Monday, and we're going to have some charts in there that will be just amazing for you. So if you're interested in making money in a down market, this is our specialty. It has been our specialty for 38 years. Thank you very much for joining us today, and come back next time.